Welcome to Drill Down Earnings. We have first quarter results from ON Semiconductor, which tells us a lot, particularly about the automotive sector. I'm Cory Johnson, Futurum Group's chief market strategist. We look at first quarter for ON Semi. It was not a great quarter. There haven't been great quarters for a while for this company, but Wall Street likes a beat or a miss, and this was a beat, so I guess the stock goes up. We'll dig into that a little bit too. For the quarter, $1.9 billion in revenues. That's down 5% on a year-over-year basis, but as I said, a little better than Wall Street expected. And profits, net income for the company, $453 million, down 2% on a year-over-year basis. When we look a little bit deeper to the business beyond the headline numbers, let's talk about what this company does in the semiconductor business. These aren't like the high-end CPUs or GPUs of an Intel or an AMD or an NVIDIA. No, these are the kind of the meat and potatoes of the semiconductor industry. In particular, they have a specialty around silicon carbide. Now, silicon carbide, of course, combines silicon and carbon atoms, but because of the way that silicon carbide semiconductors uses power, it uses less power. It has some sort of superior voltage handling, the ability to switch speeds really quickly, thermal conductivity is better, so it's really good for electric vehicles. And so they put up a really interesting slide during their presentation about how the quarter went, sort of reminding people that they are everywhere in automotive today and that they have chips all over automotives. And of course, cars are using more chips than ever. But in particular, because silicon carbide is so useful for electric vehicles and low-cost electric vehicles, particularly those made in China, that should be great when electric vehicle sales grow. But what do we know about electric vehicle sales? Teslas are falling. The rest of the industry is growing more slowly, therefore not a great quarter for ON Semi. So because of the way this material, silicon carbide works, and is so perfect for a business that is kind of on the cusp of growth, we look obviously at what the last quarter did. We saw a 5% decline in revenues, with automotive pain being felt by this company. And that kind of sinks the whole company when their analog mixed signal business actually grew and grew okay. But that power solutions business with the silicon carbide in there, really falling apart with that industry, just not a great quarter for them. But and as I mentioned, analog and mixed signals doing really well, 18% growth on a year-over-year basis. But because we know that electric vehicles are the future, or at least we think so, and I'm going to agree with that, we really want to hear about the guidance from this company. So when they came out with their guidance and they talked about their 2027 targets of faster revenue growth, better gross margins, lower operating expenses, which means higher operating margins and lower CapEx range and lots more free cash flow. And indeed, the guidance for next quarter, while it was not great, it was not terrible, as someone on Wall Street might have feared, the stock went up. So the stock, kind of bounced around a little bit in the pre-market hours right when they announced the results. And the stock's actually up a little bit today, although it's, for the year, in the last 12 months, if you look at the stock, it's only up 2% in a market that's gone up 23%. So ON Semi kind of still struggling with the EV business. But there were a lot of questions as to whether, in the conference calls, whether or not this is really the end. Is it really the pain is over? And what is the CEO saying? Is he calling a bottom right here? Well, Hassane El-Khoury, the young CEO of ON Semi, had this to say.
First off, I'm not going to call the bottom. I was very clear last time. I'll call it when I'm sitting on the top on the other side. But what we are seeing, we did see the slowdown, with inventory digestion and demand. And I believe the two are related, persistent in our outlook for Q2. But for the second half, we are starting to see stabilization in demand. Now, I wouldn't go as far as calling it a recovery, but I think if I were to use a letter that everybody talks about, it's an L at this point, meaning we're seeing stabilization, we're seeing recovery, meaning it's not deteriorating further. Now, whether or not the demand will pick up, that's too close to call that, but at least we see stabilization in our outlook.
So we're going to call it stabilization. We're going to say inventory drawdowns, which means customers not buying because they've got stuff on the shelves. That's kind of coming to an end. That's kind of positive news for this company on the margin. You're going to hear them hedging that, but it didn't sound all bad. All right, what's it all mean? The big drill on earnings takeaway. And one number that tells you a whole lot about this entire story. We'll have all that right after this.
The Drill Down is brought to you by Futurum Group, where analysts, researchers, advisors, content creators, and marketing experts help business leaders anticipate and understand shifts in their industries and build strategies to leverage disruptive innovation. With deep analysis, Futurum Group's extensive industry experience delivers reliable research and data, thought leadership, and actionable advice to help you with your strategy and go-to-market efforts. Futurum Group.
So first quarter results from ON Semiconductor tell us so much about what's going on in the EV market. And the suggestion here is that maybe the worst is over, but it doesn't mean things are great right now. Sales for this company of $1.9 billion in the quarter, down 5% on a year-over-year basis after many quarters of declines, and profits of $453 million, down 2%. But I promised you a bite, one number that really sums up the whole thing. Their silicon carbide business, which is really good for the EV business, is not good when the EV business isn't good, because 47%, there's your number, of revenues for this company come from that power solutions business, and it just wasn't very strong. All right, thanks for listening to Drill Down Earnings. Check us out on all the socials and leave some comments. Tell us what you think. Dislike us if you must. Please subscribe. Drill Down Earnings, part of 6.5 Media.